Okay, very good morning. Thursday, 17th of May. Just give you a quick summary of what we're going to cover. Quite a bit of movement in the pound seen overnight and this morning. Reports coming out about the customs union and then being subsequently denied this morning has caused a little bit of pound volatility. So we'll have a look at that in more detail. We'll have a look at Trump. Trump, the peacemaker now, and we'll explain why that is on the North Korean front and on the Chinese talks, which are upcoming today. Why we've seen some flexibility latest coming out from the president. And then we'll look at the day ahead, and then I hand you over to Sam and he'll look at the charts from a more technical perspective. So just running you through the headlines. I won't dwell on the market movements too much at this point. But the main thing is we've had a fairly quiet market open. That's reflected across the various different assets I'm looking at here on my chart. So just to run over for anyone new joining us, you've got euro, dollar, cable top left, gold top right, DAX, and S&P left and right in the center. And then you've got crude at the bottom with T-notes on the bottom right hand corner. Now that T-note chart, interesting because we're down another 5.5 ticks. So US yields continuing to rise, and having had quite a big fanfare about 48 hours ago about the break of 3.05% in the yield, we're now at 3.1 in the US 10s. So it continues to rise, which has been and will continue to be, if this remains the case, probably one of the more dominant themes in the market, which in step then has kept gold under a bit of pressure as it keeps the dollar supported with the higher yield environment in the US. The dollar index is pretty flat at the moment, but the point being it's holding on to the gains that have been seen since the beginning of the week. Otherwise, equities, not too much movement to speak of so far today. So let's just get straight into some of the stories that people have been looking at this morning. And first off, this one about the customs union. Now, it came from a Telegraph article which came out late yesterday evening. This is what the headline said: Britain prepared to stay tied to the customs union beyond 2021 after Theresa May outguns Brexiteers. Is what the headline that was being covered last night and circulated, and the pound started to rally accordingly because if you think about what's happened here, we've got Article 50, which obviously is due to elapse in March of 2019. We secured already through the previous agreements, Britain and Brussels, about the extension of transitional deal to the end of 2020. Now, these latest reports suggesting that we could remain tied to the customs union beyond even 2021. So all of this obviously leads to the belief of the removal of any kind of cliff edge scenario, more leaning towards a softer Brexit, and this would be pound positive, and hence the reason we rallied overnight. Now, if I flip that over though, because we've had a source comment come out from the PM's office this morning, directly dismissing the Telegraph report, and as such, we've had a complete pullback on the move. So to look at that graphically, I saw someone tweet this. This is a 5-minute candlestick chart of cable sterling dollar, and it kind of just gives you the narrative, if you like, the story of the pound Telegraph report coming out, the kind of second wave of activity as Asia came into the market overnight, and we kind of the market moved higher all the way up to, in the futures, we got a high of 135.87. We then had, if you like, the very early birds in UK and Europe come in. You can see a third phase of buying on that report. However, then T-notes did start to move down again as we broke the Asia Pac low this morning, and that led to a bit of a dollar strength as those yields come back into focus. So that saw a bit of a pairing in the move, and then we've had the PM's office come out and dismiss the Telegraph report. Here we are, right back at ground zero again, if you like. So an entire move of, pretty much 70 pips round trip, if you like, from the initial point from the 135 handle all the way up to that, well, 87 it got to actually, before we had a bit of a bounce off pivot here more recently on that denial. But overall, I would say if you think about the news that we've had this week, you had the Independent at the weekend, and this was specifically talking about Europe looking at an extension beyond the agreed transitional deadline of 2020. You then had further reports yesterday or the day before, talking about British sources talking about exactly the same thing, that Britain would be interested in that type of conversation. Now you've had the Telegraph talking and putting even further dates beyond 2021. That's the reason why the pound rallied. If you remember, if you're trying to interpret the news, the built-in expectation was a 6-month extension. Now you're talking about beyond 2021, so that's gone beyond 12 months. So that's the kind of what's priced in at the moment, and I'd say the fact that these things are becoming so frequent, this talk about being in the customs union, and the fact of reality is Brexit is going to be very messy. It's incredibly complicated from a legal point of view. You know, we're just talking about the customs union, the nitty-gritty of all the trade tariffs and talks still really is yet to get underway. So the reality is this is going to take an incredibly long time. So I don't think this should be wholly surprising from a trading point of view. I think all you've got to take out of this is that at the moment, you know, even though it's been denied by the PM, of course it's being talked about, and of course this is legitimate. What's priced then is beyond 2021. So if you start hearing beyond 2022, 2023, that again could be sterling positive. But just think, if it does get that much delayed, at what point do you go, well, hang about, Theresa May, where's my Brexit? I know Sam was coming in extremely angry this morning saying, where's my Brexit? And I don't blame him. You know, where is his Brexit? Because at the end of the day, that's what the Conservative Party has committed to. Too much movement from that original, moving the goalposts too much to too long a degree, I think, could then start to feed into heightened political uncertainty for Theresa May. You know, she's been pretty bulletproof so far, but you know, how far can this continue to go? So that's kind of the things I'd be looking at going forward. Talking of the Bank of England, a few things though to be aware of with the UK economy and the Bank of England. Obviously they've turned more dovish. We've had a bit of a slowdown in economic activity, representative in slower growth, GDP, inflation dropping off, and then we had the Bank of England, of course, hold rates and downgrade growth and inflation forecasts. However, when is the Bank of England going to hike rates? Or are they going to hike rates? And there's a latest survey that's come out by Bloomberg where they basically poll a series of different economists at all the major banks, and essentially the outcome is that nearly 60% of economists see a hike in August. In terms of market pricing, it's a little bit more dovish. It's about 50-50 at the moment. But just quite interested to see that economists are still looking for the fact that they're looking at the communication from the Bank of England, that the economy will probably recover from its first quarter slump. This is what Mark Carney said, and that policy still needs to be tightened in the coming years to keep inflation under control. So that was what he said last week, and a lot of these economists looking at the fact that the economy ground to a halt in Q1 amid you remember we had that extremely poor weather, and that subsequently the pullback from consumers and spending, and that materialised in the economic slowdown. So they still do remain that the Bank of England are going to pull the trigger at some point this year. And one bank that I did see this morning was this one, Morgan Stanley. They've issued a new research note saying that they stick with hawkish Bank of England call. They're saying that their belief is we're going to get a soft Brexit. They're putting the odds on a soft Brexit at 75%, and actually the softer it is, the more pound friendly it becomes. And talking through, they said that there's an underappreciation of the hawkishness applied by the MPC's framework, i.e. what the MPC are telling us is that they're going to hike rates at this point in time. Yes, they've downgraded some of the forecasts, but they still want to tighten. However, the chief UK economist at Morgan Stanley, I've just been reminded by one of our former trainees who actually knows the guy, and he said that Jacob Neal, who's the UK economist at MS, he was the same guy that said there'd be a comprehensive victory for Remain at the referendum. He's the same guy that said Hillary Clinton will comfortably beat Donald Trump. And he's the same economist that said there'll be a fall in oil prices and the next week it rallied $5. So take these bank comments as you will. As much as I think there's logic behind what this chap is saying, for sure, and certainly we know that the soft Brexit, it would be more pound friendly, his track record is a little sketchy. All right, a few other things to have a quick look at, and I did mention Trump. So what's he been up to? Well, Trump shows flexibility on North Korean talks. Now, there's been, last couple of morning briefings, I've been talking about the fact that North Korean feathers seem to be ruffled once again by the fact that John Bolton's Libyan model, when he was talking about slightly more kind of harder line in reference to which North Korea would have to quickly give up its nuclear arsenal to the US. John Bolton said that trying to force a unilateral nuclear abandonment program, and that meant that Korean officials from the north have threatened to walk away from a summit that's due to be held in a couple of weeks' time. The president, though, coming out and basically saying, this isn't the case, distancing himself from those comments from Bolton. Sanders saying Trump to run summit talks as he sees fit. So who would have thought? The biggest hawk is now Bolton, and Trump trying to tame him. On a similar note, we've also had this one. The US team said to be divided with trade talks with China, and actually this has been heating up a little bit. This trade focus, which was obviously a big dominant theme from a macro perspective 2 or 3 months ago, is coming back to the fore. And the reason why we're talking about this today is that Chinese commerce officials are going to be arriving in Washington to continue talks about these trade level discussions. So China and the US set to begin their second round of high-level talks aimed at averting a potential trade war. Now, if you're trying to interpret, again, information and news as you hear it and see it, one of the names you might hear mentioned is a Chinese telecom equipment manufacturer called ZTE. Now, the reason why they're in focus is because ZTE, they suspended their shares a few weeks ago. They halted operations earlier this month as a result of a US ban on its sourcing of vital parts from American suppliers. The whole point here was that the ban was imposed by the US Department of Commerce that the Chinese firm allegedly violated the terms of an earlier settlement related to the sales of restricted equipment that they were selling to Iran and North Korea. So what do you do in a negotiation then? Well, China have broken the rules, so what Trump is doing is relatively clever from a business acumen point of view. He's using that as leverage to try and get some big US M&A deals over the line, such as regulatory clearance from the Chinese for Qualcomm's proposed takeover of NXP, and also to agree that China would not target US agricultural exports with punitive tariffs. We're talking about M&A deals here of in excess of $40 billion. If you can come back and say that you've managed to get these deals for the better of North American companies, and you've also protected the agricultural heartland of America, well, from a presidential point of view, done very well. The only problem is now that Trump, and the reason why the headline talks about a divided team, is that he's surrounded by a lot of pretty big egos. You've got Peter Navarro, the trade advisor, Wilbur Ross, the commerce secretary, the economic council head, Larry Kudlow. Apparently they all want a piece of the pie on what wants to be said and what direction we should go in, and that's where this kind of friction is coming from. But again, Trump, though, seems to be taking the more business angle of this, and how do we leverage it to get the best outcome for putting America first. It's the others now that are seemingly causing some issues. But one thing I'd say is I'll clarify specific timings of their meetings that will occur later today, but any headlines pertaining to this breakdown in any agreement being attained, and i.e. heightening the risk of a renewed trade war tensions, would be ultimately net negative for market sentiment, is how I'd read into this. Okay, quick look at the calendar then. Let me hand you over to Sam. He'll look at the charts in more detail. So looking to this morning, it is very quiet from a UK economic data point of view. Nothing really major coming out of the Eurozone either. Regular initial jobless claims from the US Thursday afternoon. That'll be alongside Philly Fed. But we do have quite a few speakers on the docket, and mainly centered around the afternoon session. You got Victor Constancio, departing Vice President of the ECB, speaking just before midday, and then speaks again at 1 p.m. Neil Kashkari, a well-known dove of the Federal Reserve, albeit now a non-voting member, is speaking at 3:45. And then you've got Bank of England's Haldane. Any Bank of England members, I think, are quite interesting to monitor at the moment. Haldane in particular. He's the chief economist. He has flip-flopped between being hawkish and dovish, and just given what happened last week, given this kind of 50-50 bet about the August rate rise, I'd be just quite interested to watch this Haldane speech that's coming at 5 p.m. Otherwise, if you're a fixed income European trader, just be aware you do have quite a large batch of supply coming out of the Tesoro and Tresor from France and Spain respectively. So cumulatively, you're talking about a good 11-12 billion euros worth of bond supply hitting the market this morning. Bund's down already about 30 ticks, having dropped at the Eurex Open this morning. All right, let me hand you over to Sam, and I wish you a good day and see you in the chat room. Thank you very much.
Hi guys, let's have a quick look over. Start with, well, obviously we've got oil here in the middle bottom, just coming up to its R1 high of the day, just ticking through that now, but more importantly you've got the yearly high just to the left hand side here that we had back on 2 days ago. So just keeping an eye on oil here. Pretty interesting level from, one second, from Tuesday and then last week as well. So 71.89 here on the futures, albeit just a tick above. Just keeping an eye as we test that level now, and I think if we get through there, you'll get a quick pop through to $72. So important one to keep an eye on. And yet again, as we speak in the briefing, you've got gasoline just pushing to a new high as well. You can see that they're just really pushing on here. This is the highest gasoline has been since, have a quick look over, yeah, back in September 2014. So really pushing on, and keep an eye here on oil. Just first test this morning of that 71.89 just coming down. You've really just seen 10 cent come off from that high, but definitely be one to focus on if we can get a push through there. And if we do, you'd probably see Canadian dollar also push a bit higher. As you can see, that's just coming off its R1 as well, so that'd be one just to keep an eye on in the morning session. Having a look over at Euro, already been quite messy around that pivot. You can see we had a bit of a breakdown not too long ago, just after 7 o'clock, and the sort of the classic initial first retest that pivot worked quite well, and then since then it's been rather choppy. I think if we were to get a bit higher, I mean, I really would want to be leaving this sort of area alone now. I like the look of R1. You've got yesterday's high and a bit of the high from Tuesday evening around there as well. So you've got your sort of two technical reasons. You've got the sentiment really that has still been to the downside here, and using, I think, what is currently the high of the day, or high of the sort of the morning session so far, would be a decent area for the profit target. So good sort of risk reward trade, sentiment following trend trade as well. I quite like the look of that. To the downside, obviously, if we get through the low of the day, lows of yesterday and S1 do come into play, so something to bear in mind there for this Euro, which last couple of days has given an opportunity. It has sort of in the morning session just pushed a bit higher for only to then come down sort of early afternoon, late morning. So I'll be focusing on the short side for now. I think that's a decent opportunity if we were to get a bit higher. Aussie dollar, which really is consolidating here. I think if we can get to the top end of this sort of range that we've been in for the last couple of weeks, not too far away from today's R2 with those highs, could be a nice place to look to go short. Again, similar to Euro in that you're using what is currently the high of the day really is the first sort of profit target perhaps for that trade. If not, if we weren't to get through there, the morning or yesterday's sort of high, today's low around sort of 8 o'clock, sorry, if we can get through there, then obviously the low of the day and the pivot can come into play, where you'd expect to see quite good support around that pivot area, which we found good resistance early morning yesterday as well. So dollar pairs, again, this sort of time in the morning, the dollar index has been up and down, so no real direction as of yet, but just something to bear in mind. Last 3 days, Monday, Tuesday, Wednesday, into the sort of the midday period and afternoon, the dollar has just started to strengthen a bit more there, so something to focus on. Dollar yen has actually this morning just pushed a bit higher through yesterday and Tuesday's high, and R2 just been tested now on the futures. First test just coming down a bit. The classic, as we broke through Tuesday's high, worked very well. You can see nice push, and you could have sort of faded some out from R1 and then obviously higher the day in R2, so it would have been a nice trade to look at there. And I think if we do come back down to test this point along with the high of today, or previous high I should say, from this morning earlier hours, sort of just after midnight, you could expect some decent support there for another push higher. Equities, we'll start with the Nasdaq, because that's the one I can see on my left hand side, just pushing below the pivot this morning, similar in that we've had a retest and it's held quite well as resistance along with what was the low of yesterday evening. Bit of support can be found just below where we're trading, so it's sort of stuck within that range for now, and you can see how sort of technical this point has been for the Nasdaq. So I'd be perhaps looking for either a break back above towards the pivot, and then you're looking really at this trend from last night's highs to this morning's highs to perhaps break or be respected, or a break through this low, this area of support, and S1 doesn't seem too far away. Not a bad area here, where we found a bit of support after the cash open to take some profit. Overall direction for equities, you can just see from this week, it's pretty mixed. Obviously we had the sort of mini sell-off back on Tuesday, pretty much undoing that all yesterday. So overall directional bias, not too sure to be honest, so wait and sort of see if we can get maybe a break either way, as the range is quite choppy as well. Same goes here for S&P. You've got that support that we're just sort of testing now, where we found support last night as well. Stuck within this range, but it's lower the time frame to 15 minutes. I think really you're better off just waiting for a confirmed break, perhaps in the afternoon, either higher and breaking this trend that we've seen from last night, or a push lower, and then you can start to target the area of support following cash open yesterday and then down to S1. So it can be similar for the Nasdaq and the S&P. Just having a quick look over again at Aussie dollar, which is just coming a bit higher, so keep an eye on that R1 and higher the day for that market. Oil, as you see, still holding around the R1. Gold, let's have a quick look over just to wrap things up. And what I quite like about gold, obviously keeping an eye on that 1300, but today's R1, yesterday's high, good area in the market, and similar with quite a lot of these markets today. Let me just refresh this chart. The previous high of today, if we were to get there, or i.e. today's high, could be a good first target to sort of take a portion of that trade off. So quite a few technically good opportunities I feel today if we are to retrace higher, and then you can get a decent sort of risk reward opportunity to come from that. So for now, dollar mix, keep an eye on oil. Equities, wait and see. Dollar pairs I prefer a bit higher up, just to continue perhaps this dollar strength into the afternoon, which is what we've seen Monday, Tuesday and yesterday as well. Any questions as usual, please do let me know, or Anto will be in the chat for the remainder of the day. But if I don't speak to you, have a good day, and I'll catch up with you guys later.